Vincenzo's Go Crypto Investing this July the 28th, 2025 nightly cryptocurrency update. I couldn't make a video earlier today. I had to play truck driver today at work. So I was on the road in a big truck driving around across the great state of Michigan that had some flash flooding this evening with 2 to 5 inches of rain fell over the Metro Detroit area, downtown Detroit, or the airport had 3.25 inches of rain. You can see the cryptocurrency prices today. After Ethereum was up 9 or 10% over the weekend, it came down about 2.5 to 3% earlier today. The coins were down earlier, but if we look at DGB, you can see, oh, DGB just flipped over. That's what's going on. I forget it's ahead, but the coins are trying to recover. And if we take a look at the Bitcoin price to start it off here, you can see the Bitcoin price is still trading sideways. And we were talking about our track shows it now 18 days. And what should happen if it's playing our track? We had our little capitulation there, which was right there. Then we said we should have a pump up. It did. Then you should have near a double bottom, something like that. And then if it's going to pull true, that's when it kicks out. That's what we're going to be watching now. If on a retest, does it hold this regional bottom right there at 114,700 and change, which would be like sitting right here. Here was here, right? Here was here. Then we had the dump. We had the dump. Then we had the pump. Then we had the pump. Then we had the correction and the hold just above the dump. Now we're having the dump. If we hold just below here, that's when you can potentially be breaking out to the upside, to the next leg to the upside after this brief consolidation, all the way up to the 155,000. That's what we've been watching since we got up to the 123,000 and we consolidated because it looked so similar to this. And that's what we've been watching out for the last 7 to 10 days now, because this was about 18 days we needed. And from the peak to where we're at now, we're at day 17. And if we go from here, from peak to breakout, it's about right now, right? So we're either going to have a big breakout here in the next 48 to 72 hours, or this is going to break to the downside. And your major short-term support would be the 50 there at 111,000, or the uptrending rising channel support just below the 100-day moving average, uptrending at about 105, $106,000 right there, right? 106,500. That's your major short-term support. And then obviously your medium-term bullish or bearish would be this 97,000 if you ended up coming down on a pattern retest. But right now we're at that decision point and we're gonna have to continue to watch. And we're talking about the short term here in Bitcoin. You can see Bitcoin dominance. There was the sell off with the altcoins the last couple of days because you can see after we had the big dump in dominance from 66.12 all the way down to a regional low of 60.44, you can see we've had a little bit of a bounce back. And initially we had a 3.43% bounce back up to 62.49% dominance over the weekend and on last week, and that was what helped the altcoins correct to the downside. You can see Ethereum what it did over the weekend. Friday, I believe we were down here. Thursday, Friday, we were here. So over the weekend, we went up about 10%. And then we got a brief correction just below that $4,053. And as you do know, that's your major upper resistance now, because that's your megaphone neckline resistance. And you say, Vincenzo, what's a megaphone pattern? A megaphone pattern can be up or down, but in this case, you had your big move to the upside right there, right? You swung to the upside, see that? You swung up and you formed sort of like a flagpole. Then your megaphone pattern is you have a horizontal resistance at the same level where you repeatedly over time get rejected at the same level. You can see we started it here back in April of 24. Then we hit it in June of 24. Then we hit it in November of 24. Now we're running up against it in July of 25. The same horizontal resistance. You see that? And then you have a descending underneath support, right? Where it's falling. So it's a falling away and forming a big wedge, right? A big megaphone, it looks like. That's why they call it the megaphone pattern. See that? And if they break bullish, you would go from the bottom of the megaphone pattern to the top, right, of the pattern, get out of there to the point of a breakout. And that brings you up all the way to $10,000. Actually, we did mark it out right there. Now, there's another one right here. This is the one we want. That's a flagpole breakout to 17,000, but the megaphone pattern would be like this. Then you would go to the neckline, and that gets you up to about $10,000 if this megaphone pattern breaks to the upside. But that's a long term. In the short term, the 4,053 is your major support. The 3,472 and 42 cents, or the top part of the screen trading zone, is your short term major support. Obviously, if you broke that, you would come to the bottom part of that green trading zone at 3,059.42, right about where the 50-day moving average is or will be in a few days, and the regional rising channel that you're in. So that's what you're looking like right now. Megaphone resistance, 4,053. Major short and medium term support, 3,472, right? If we go look at the XLM, it continues, like we were talking about over the weekend, continues to correct and continues to consolidate along the 43 cents. And what's going to happen now is similar to what happened when you had that big pump with the Donald Trump rally in November and December of 2024, going into the new year in January of 25. If this doesn't continue to break to the upside and the volume starts to die down and you start to correct, you're going to have a similar breakdown that you had with that pump, because this was a similar pump to the upside. And your next drop down, if you can't hold this 43 cents, is what you've been fighting on for 4 or 5 days, you're going to come down very quickly to the 36 cents. And just so happens the 50-day moving average is right there, the top part of that green support and resistance box. And that's your short term and medium term area. If you're below that 36 cents, you're bearish again, and you're going to quickly go down to the 200-day moving average and the bottom part of that green trading zone at 31 cents. So in the short term right now, you need to hold this 43 cents. If you do not hold this 43 cents and you get back below it, you're going to drop down to the 36 cents. If you can hold in the short term this 43, you could try to make another run at the 52 cents. XRP is the same thing. It's trying to hold on this 304 as it flipped it and trying to hold it as major support now, just below the 376 major upper resistance and the all-time high at 385 from 2017. Right now, if you hold this 304, you can make another run at the 376 and try to break it. If you don't, just like XLM and just like what happened back with the November, uh, along with XLM, we're going to update these moving averages. If you can't hold that 304, you're going to drop back to the 255 just on the 100-day moving average, right? You're going to come right onto that. And then that's your major short term bearish. If you get below 255, you're again short, medium term, extremely bearish. And if you get below the 255 in the short term, you're going to come all the way back down to the 209 neckline support. And then we might be talking about a mountain double top here, where we have the big top one, top two. That would be something that we're looking at if you continue to get rejected and can't stay above the 302. But in the short term, again, if you stay above the 304, you can make a run at the 376. Oh shit, I'm burning my ride. If you get below that 304, you're liable to come to the 50-day moving average and then your major underneath support, which is the 255. And that's what you need to stay above. So if you can't stay above the 304, you're going to come to the 255. If you hold the 304, you're going to make a run at the 376. And then we're only talking about the short term here right now. And that's what I feel like would happen here in the short term. And that's what we're going to be watching for over the next several days to see exactly how this plays out. If the Bears take a stranglehold on the market, or the Bulls can hold and confirm this as just a natural, brief consolidation, and the pump is going to continue. But only time will tell as this week moves on. Algo, same thing as it was over the weekend. You're below the 36 cents, but yet you're above the 24.5 cents. In the middle of this red trading zone. If you dip and get below the 24 cents, you're going to get on these moving averages. You need to stay above this 24 cents in this red trading zone, or else you would slip to and probably through the moving averages and work your way back down towards the 20 cents. If you slip the bottom part of this red trading zone at 24 cents, as long as you're above that, you can start and continue to work your way towards the 36 cents. And if you ended up at some point breaking 30 cents, your major upper resistance in the next level is 52 cents, or the bottom part of that green trading zone. As well as if you broke the 24 cents, your major underneath support is 20 cents. And algo I think somebody asked for XCN earlier. XCN is sitting here on the moving averages right now, sitting right in between the 50, or actually just below the 100-day moving average, and just above the 0.0149 and the 200-day moving average. And we do know from the last several days, you need to stay above that 0.014 to stay bullish, because if you breach and get back below that, just like you fell very quickly back here before you had a big rally, if you breach and can't stay on top of this 0.014, you're going to come straight down to the bottom part of this trading zone again, or trading box at 0.008. If you can hold these moving averages, the 50 and the 100, which are just below them right now, and the top part of that purple trading zone at 0.0149, you can hold that and continue to try to work your way back up near the 0.022. And I think LCX was what somebody wanted. LCX continues to fall to the downside. It tried to get a return rally along with the rest of the market at 0.0920 in yellow, had a nice bounce, bounced all the way back up to the point, the one just about 1.5 cents, but it's consistently got rejected. And what's sitting there is a falling 200-day moving average. And now you got the 100-day and the 50-day, and you've had no bullish crosses in these yet. It's been all bearish since November. And if you want to get bullish in this, you got to get back above these three moving averages, and would have to look something like this, where you have to hold this 1.5 cents, and that's how you can get bullish. And if you could do that, your major upper resistance is 22 cents. But if you can't and you continue to get rejected, your major underneath support is the 0.09, right? Like the channel, subscribe. We'll give you another altcoin update later on and some news. Peace and love. Direct side, bro. Jay.